Hi, I'm Dan Huckabee, President of Commercial Surety Bond Agency. Our mission as a company is to help contractors grow and build their businesses. One of the main ways we do that is by educating contractors on the intricacies of surety bonds, and we've put together a series of videos to do just that. Here's our latest video.
Welcome to today's video, where we are going to discuss what percentage of completion basis accounting is for contractors. Many contractors are familiar with the term, and you may have heard it from your surety company asking you to change your accounting from either accrual or cash basis to percentage of completion basis. A lot of contractors simply have their CPA make the appropriate adjustments, but never fully understand what percentage of completion accounting is. This can be extremely valuable, not only for communicating with your surety, but also to run your business. What we have on the screen here is a sample financial statement. We're looking at the income statement. Here you can see the contract revenues of $31 million. We've got the direct costs of $29 million, gross profit of $2 million, and then operating expenses here. That's also called G&A, or general administrative expenses, for $2.3 million. And then down here we've got the net income of $29,000. So what we're going to do is scroll down here to the completed contracts and the contracts in progress schedules and show you how those numbers are derived. Let me just make that a little bigger. So if you're not familiar with the contracts in progress schedule, it's basically a list of your projects, and you can see these first three columns has the revised contract amount. That amount here is going to be the amount that includes change orders, and then you have your total estimated cost for the project, and again, that's going to include any costs for change orders and your total estimated gross profit or loss. Percentage of completion basis accounting is often referred to as cost to cost, because in order to recognize the revenue, cost, and gross profit, it uses the cost incurred to date divided by the total estimated cost. So here what you have is the total contract of what's been incurred. And so as an example, we've got this first contract with $4.2 million of cost that's been incurred, and you have total estimated costs of $6.5 million. So if you take that 4.2 and divide it by 6.5, you get the percentage complete, which is 64.9%. And so in order to recognize how much revenue has been earned, you take that 64.9% and multiply it by the total contract amount, which is $9.1 million. And in doing so, you're going to get this number here, $5.9 million. And then you do the same thing on the gross profit. You take this 64.9%, multiply it by the total gross profit of $2.5 million, and you're going to get $1.6 million. And so that's for the total contract amount and gross profit of how much would be earned. Now, to get the amount for just this year, because a lot of contracts will extend multiple years, you've got to subtract everything that was incurred in a prior year. So to show you that, I'm going to scroll up here to the completed contract schedule. The completed contract schedule is the exact same thing as the contracts in progress, and it's showing a list of your jobs, except these jobs are all complete. And so you see the list here of the contracts, and the first three columns, the total amounts that were made on or lost on the projects. And what this also shows, though, is the amount prior to this year. And so here you can see last year, and prior to this year, I should say, $6 million of the contract was earned. So in order to figure out how much of the contract was earned in this current period in these columns, you simply take the total amount of the contract, the $7.6 million here, and then you subtract the amount that was earned in the prior periods of $6 million, And that will give you this number here, which is $1.6 million. And then you'll do the same thing for cost. Cost in total is $7.1 million. You'll subtract what was earned in a prior period of $5.6 million. And then you have this number here of $1.5 million. And same thing on the gross profit. 506,000 minus 428 equals 84,000. And then what you can see here in this section is you'll see the total. You'll see the total for the contract revenue is 14 million. Then you have 12 million in cost and 1.7 million in gross profit. And I'm going to scroll up here to this schedule of contract revenue because you'll see that it matches these numbers here: 14 million in revenue, 12 million in cost, and 1.7 in gross profit. And I'm also going to scroll down just to the contracts in progress schedule to show you the same thing. The same thing is done here. This is for the year ending December 31st, this current period. And so it has the totals. And again, you'll see 17.5 million in revenue, 17 million in cost, and then 469,000 in gross profit. So if we scroll up here, you're going to see that same thing, the same numbers. And then when you total these numbers, $31 million in revenue and 29 million in cost and 2 million in gross profit, when we go up to the income statement above, you'll see that those numbers match. And so that is where these three numbers are derived from. And then your overhead expense is pretty straightforward. You get that from your accounting information, and then from there, you subtract those and you're going to get your profit from operations.
We hope you found our video informative. If you have any questions, or if you're interested in partnering with us to grow your business, please give us a call or shoot us an email using the Contact Us page. Thank you.